Let's talk to Mike van Dulken. He is the head of research at Accendo Markets. Good morning to you, young Mike. Right, we've got some thought-provoking charts as always. Let's kick off on the FTSE hourly chart. One-way traffic.
Has been for, well, I think we're up to 8 weeks now from those late March lows.
Extraordinary. 1,000 points.
But what we can't forget, though, is we're still only up 1 or 2% year to date. So, we had that very strong January sell-off, which extended into February and took us below 7,000, only to, we're pretty much retracing all of it. But year to date, this applies to most major equity indices, actually. We're not 10% up for the year, far from it. I think for the UK, we only just went back into positive territory late last week. And I think there might be 1 or 2 major indices, I think in Asia, which might be 3 or 5% to the good for the year.
Right.
So it's one-way traffic, but it's a retrace of the lost ground in January. But what I'm very interested in now, especially, we've gone through all-time highs, which was 7803. We went through that on Friday. What I'm interested now in is this trend line which goes across the top, which we can draw all the way back for 4.5 years. Now, whether that comes into play, there's no guarantee, but I think it's always worth reminding ourselves that is potential resistance. If we could go onto the longer-term chart, we can see there that, I'm only showing the prior touch, which was January. It's a very shallow angle of ascent. As I said, whether it represents any meaningful resistance just ahead of 7.9, around 7.9, just shy. To be honest, it could well be 10 points or so from where we trade now. But as you say, that trend from the end of March is very strong. There is a lot of momentum. The index is technically overbought if you look at RSI or stochastics, those technical indicators. And it has been now for, I think, 5 or 6 weeks, which makes sense given the strength of this rising channel. It hasn't had that many consecutive weeks of being overbought until we go back to January, when we were rallying from the Santa rally, and we got to those all-time highs. And then October, and then the prior June, and the prior January. But as we've seen before, markets can stay overbought technically indefinitely. If the market wants to keep rising, they will just stay overbought. They trade within a range, so you get up to that overbought, it can stay there. But we need to be mindful of any hints that we could be in line for a correction. But for the moment now, I think you'd want to see a break back below January's highs, 7803, before you start getting very concerned. We've been up for so long now, maybe a 40-point sell-off might worry some people, but it would barely take us back to, it wouldn't even take us back to January's highs. I think we'd need a 100-point move now to get back below January's highs to think that, okay, we may have topped out and we could be due a more significant correction. Okay, so the key resistance around the 7,900 level. Let's move on to BT. What are your thoughts here? Well, we looked at this last time I was here, just before the results. I think it was showing that slight bounce from 235 back towards 240. It had already turned back from 250 within this very long-term falling channel, and the results were, the results themselves showed, struggling financials. The outlook was poor. Spent loads on football, is not really delivering. Questions about whether Gavin Patterson is the man to lead them into the next era of growth, if you like. So the shares sold off 7% or so, and then continued lower for the days after. Now, we've got a smidgen of support around 202, I think it was. Nothing yet for me to get excited about a breakout. We're in a lovely channel, which will give us a message either way. If we break to 210, that could be the bottom, and we go back to the channel ceiling. If we break lower, well, we fall out from that channel, and you could go back to 197, which is, I think if we look at the next chart, it shows the June 2012 lows. So, you're talking May. I think this is actually the weakest stock on the FTSE. I've been through all of them yesterday. This is the only one trading at the lows. The FTSE pushing highs makes sense as momentum. Most stocks are trading very, very high. But relatively, this is a dog. Yeah, if we go back to the prior chart briefly, the technicals are all showing, stochastics are very oversold. The directional indicators are turning from their bearish extremes. The RSI is oversold. Momentum is ticking up a bit. I'd still like a bit confirmation of a breakout on the actual price chart itself, but you've had the 15% downside. There could be 15% upside, and purely on bargain hunting. It's not that we think the fortunes have changed for the company. Far from it. But technically, it has done this so many times, and I wrote about it last Friday. A case of Groundhog Day. Yes, it's boring, predictable. Who cares when you've got 15% returns on on the
Good
cards.
point. Okay, let's wrap up with the last slide. EasyJet. We talked about this last time on the show.
We did. I brought this in to show you know you made the right call. I was expecting it to stay within that sideways range. Lo and behold, we got the breakout, which extends the uptrend. So that channel may have well been, you know, bullish flag pause before another leg higher. I guess boosted yesterday by a bit of indecision on Ryanair.
But the headlines weren't great, were they?
No, it traded lower. The guidance was cut, but I think markets were maybe expecting that. News about rising oil prices, no surprise to anyone. They're now negotiating with the trades unions, so they're having to pay more for pilots and cabin crew. So their cost base was always going to be higher. I think they still believe that Ryanair and indeed EasyJet are going to win out over the flagship carriers, in which case, you know, these guys should trend pretty much together, even if Ryanair is perhaps the more aggressive in terms of pricing their airfares. So there may be upside to this for EasyJet still to 1950. The highs of December 2014. Another stock with multi-year highs, which kind of backs up the FTSE, just pushing on and on.
On that note, Mike, thank you very much indeed.
Thank you.